In today's video, we're going to be going over how much does life insurance cost in Canada. So with that, there's a multitude of different factors that determine your pricing for life insurance, such as your age, your gender, smoking status, different health factors that may contribute to it, different lifestyle decisions that may contribute to it. And in this video, we're going to break down exactly how those affect you to determine what your life insurance rate would be here in Canada. What's up, guys? For those of you who do not know me, my name is Philip Setter. I'm the founder and CEO of Affinity Life, which is an online life insurance platform here in Canada where you can actually view quotes 100% online and apply 100% online as well. So if that sounds interesting, I'll put the link in the description below. But without further ado, let's get right into the video. So I think there's a lot of misconceptions, not only here in Canada, but all across the world about life insurance and how much it should cost. The problem is there's such a multitude of different factors that go into determining what the price of life insurance is that it's sometimes hard to compare apples to apples. And you might have a product already, and then maybe your friend or your neighbor or someone else has a product, and you're trying to compare apples to apples to see why maybe theirs is more expensive or maybe theirs is cheaper. And it's quite difficult because there's so many factors that go into determining what the price of life insurance is. And in this video, I am going to be going over a lot of those so you have a little bit better idea about how insurance companies factor in their pricing for life insurance. But the average cost for life insurance in Canada is anywhere from $10 to $100 per month. So that should give you a little bit of a general idea of how much life insurance costs. If you're below that, something might be wrong. If you're above that, well, maybe you're overpaying for life insurance, or depending on what product you have, maybe you're paying the right amount. And again, in this video, we're going to break down how insurance companies price their insurance products so you'll know where you fit in that spectrum. So just to give you guys a little bit of a ballpark figure idea of how much life insurance costs in Canada, I've pulled some numbers off here and I'm going to read it off. I'm going to put it on the screen for you as well, but I'm going to read off some numbers. This is for a male 30-year-old. This is in a term 10 product for $500,000 of coverage here in Canada. This is assuming that they're a healthy individual, non-smoking, and all other things are the same. So you can see here we have the top 7 companies in Canada. By the way, this is pulled off a company called Quote. They don't sell insurance to anyone. They just have all the insurance rates across Canada. They have all the different companies, but just to keep it a little bit simple, I've only put the top 7 for each of these different reports that I'm going to show you. You can see here RBC Insurance is number 1. They're relatively usually always the cheapest around in a term product, but you can see monthly premium $22.32 per month. Then it goes Empire Life, Desjardins, Faith Life Financial, Wawanesa, Canada Life, Cumus Life, etc., etc. That gives you a ballpark number. We're looking at $22 per month for $500,000 of coverage for a 30-year-old male. That's relatively easy to understand. Now, let's get into some of the factors that actually affect life insurance pricing and how insurance companies look at these different factors. So obviously, the first factor that an insurance company is going to look at is your age. And I mean, this is pretty straightforward, but if you didn't know it already, I'll tell it to you. The younger you are, the cheaper it is to get life insurance. The older you get, the more expensive it becomes to get life insurance. And I mean, again, this is pretty straightforward because the older you get, the possibility of you dying becomes significantly higher and higher until it gets to the point where, you could die any day. Maybe you're 80 or 90 years old at that point, and the insurance company says like, okay, obviously this person could die any day. The risk for us is quite high. Hence the reason the older you get, the more costly your life insurance is. So just to give you a little bit of an idea about how much that cost of life insurance goes up as you get older, I'll give you a couple numbers here. So here we have that same report, same conditions that I gave you in the last one. The only difference now is this individual is 35 years old, still healthy, non-smoker. Everything else is the same. Term 10, $500,000 coverage. You see there, the number 1 is now at $23.85 per month. So it hasn't gone up that much. You see RBC down at number 3. It's now $24.61. So it's gone up maybe $2 or $2.50. Not that much of an increase from age 30 to 35. However, you can see as we go up to age 40, it gets a little bit more expensive at this point. It's now at $31 and $32 respectively. So it's up $10 a month from the age 35, And if we go up now to age 45, this is where you can start to see the premiums jump considerably. RBC insurance coming in at $50 a month, which is a far cry from the $22 a month it was at age 30. So you can see as you start to get older, of course, the cost of life insurance is going to increase. The next thing that life insurance companies are going to look at when determining the pricing for life insurance is gender. And now, I'm sorry, guys, to say this to you, but unfortunately, men will cost more for life insurance than women. And that's because men just die more than women do. Sorry, guys, it's just a fact. we do a lot dumber shit, and it is what it is. So just to give you some ideas here of men versus women, we'll give you the same term 10 product, healthy, non-smoker, $500,000 of coverage. The same product from the number one company here in Canada, seems like it's Empire Life. When I say number one, I'm talking about the least expensive, of course, because that's how it listed and within this report, is coming in at $15.30 per month. So you can see it actually makes quite a big difference. It's almost 30% cheaper at this one given age, $22 versus $15, maybe a little bit less than 30%, maybe about 23 to 27% cheaper. But unfortunately for men, it's more expensive to get life insurance than it is for women. But fun fact, for disability insurance, it's actually cheaper to get it for men than it is for women. And that's probably just because, we won't take time off if we get hurt. We'll just go right back to work, and we're not usually going to make a claim because we don't want to pretend like we're injured, or we don't want people to feel sorry for us, or whatever it is. But disability insurance is actually cheaper for men than it is for women. Now, the third thing that life insurance companies are going to look at to determine pricing for you here in Canada is, of course, your smoking status. So smoking can include a lot more than just cigarettes. They look at a multitude of different tobacco options, such as cigars, cigarillos, chewing tobacco, cigarettes. They also look at cannabis, and that's a little bit other can of worms, or bucket of worms. There we go. But regardless, life insurance companies will look at smokers in a negative light. And unfortunately, just how it is because of the negative health conditions that arise from that. And remember, if we go back to our example of a 30-year-old male non-smoker, it was about $22 per month. All things the same, but now a smoker, we're looking at $45 a month for the exact same product. And that's going to be the cheapest one in Canada. It looks like it's coming from Wawanesa Life. So you can see that smoking almost, in fact, more than doubles the amount that you would pay in premiums versus a non-smoker. Now, the next three things that I'm going to talk about, unfortunately, I can't illustrate for you what they would actually result in for an increased premium here in Canada, but I'll give you a little bit idea about what they might rate you and what it would look like. So the first one is, of course, your health condition. So this one's incredibly hard to try and tell you how much it would cost if you're unhealthy versus healthy. But if you were one of those individuals that had some adverse health conditions, maybe you were diagnosed with cancer, maybe you had diabetes, maybe you had a heart attack in the past, maybe you have other adverse health conditions besides those. Regardless, at the end of the day, the life insurance company will look at these factors, and more often than not, you're either going to get a rating or you're going to be declined. So a rating is essentially where they're going to give you an increase in the premium. So what I showed you before with all of those numbers, that's assuming that you're a healthy individual with no adverse health conditions. Now, if you did have some adverse health conditions, they would give you what's called a rating, and that would just increase the premium. So maybe instead of $22, it would be $30 or $35 or $40. That's all a rating is. And it's usually in a percentage. So it could be 150, 250, 300% rating. And that gives you a good idea of how much it could be extra. Now, of course, the other option that they could do is they could just decline you altogether for the insurance. They could say, you're too risky of an individual. We're not going to insure you. Now, of course, there are other life insurance options at that point, products called simplified issue products that are available for individuals with adverse health conditions. And I'll put a link right there or somewhere in the box there. You can click the video where I discuss that a little bit more, but there still are some options available for people with adverse health conditions that would be denied from a traditional life insurance company. Insurance companies will also look at your family health history. So if you have history within your family of other adverse health conditions, they're going to look at that as well, which maybe to you sounds a little bit unfair if you're relatively healthy yourself. However, maybe your family has some adverse health conditions that in your mind maybe shouldn't affect the pricing, but unfortunately it does. Life insurance companies will look at those health conditions that your family members also have, because it could be a determinant factor for them to see if maybe you would develop those conditions later on in life. And you could get, again, a rating from that or possibly a decline. But in most cases, you would probably not get a decline. You may just get a rating. The third big one that insurance companies are going to look at with given a rating or possibly decline is lifestyle decisions or risky jobs or risky lifestyle habits. And so I'll explain a little bit of what that means. Let's just start maybe with jobs that you might be in. So if you're in a hazardous job such as mining, roofing, logging, construction, maybe you work on the oil rig, maybe you're doing some type of underwater welding, that could contribute to the pricing of your life insurance. And if you work in a very hazardous occupation, there's a good chance the insurance company will give you a rating based upon that hazardous job. And the same applies to other lifestyle decisions as well. If you have a high number of speeding tickets, perhaps. If you're engaged in some type of risky extreme sports, maybe such as paragliding, hang gliding, ice climbing, rock climbing, backcountry skiing, that could also possibly give you a rating or again, a decline. They also look at other lifestyle habits such as how much do you drink? Do you do any drugs? Those things will very negatively impact the rating of your life insurance. Now, the next three things I'm going to talk about are essentially the different types of product and coverages that you can choose and how this affects your price. Well, of course, if you wanted $1 million face amount, that's going to be more expensive than a $500,000 face amount. So the first one I'll talk about is term versus permanent. So term life insurance is going to be much cheaper than permanent life insurance. Term life insurance is only meant to cover you for a specific period of time. And for the life insurance company, it's really not a matter of when you'll die. It's a matter of if you'll die. So they take this policy on under the assumption that you're probably going to live, and they factor in a small percentage of people that may die based upon the variety of factors that I just described in this video. And they'll assign a mortality rate to that. And they'll say, okay, we're comfortable charging this small amount of premium because we know only a few people will die. The vast majority of them will live. However, with permanent life insurance, that's different because now it's not a matter of if, it's a matter of when, because permanent life insurance covers you until death. That's the reason that those premiums are so much substantially higher than term life insurance. And again, I would say if you're a young family looking for cheap, affordable coverage for a specific period of time, term life insurance is the best option to go for in that scenario. If you're an older individual and you're looking towards maybe estate planning, leaving something behind to your children or grandchildren, or planning for taxes upon death, that's when I would start to look towards permanent life insurance. However, if you've heard this saying before, maybe I should invest in life insurance and I can use that during my retirement, that again is a whole other can of worms. I made a much longer video about that and I'll put the link to that there, and you can watch that of why I think it's a bad idea for the vast majority of Canadians to invest in life insurance. And I believe that term life insurance is one of the best options for individuals here in Canada. The last two is just coverage amount. And like I said, $1 million is going to be more expensive than $500,000. That's pretty straightforward. And the third one is term length. So term length refers to term life insurance. So the shorter the term, the cheaper it's going to be. A term 10 is going to be much cheaper than a term 20, which is going to be much cheaper than a term 30. However, the price of that term is going to jump up about 2 to 3 times the original price once you renew it. So for example, if you picked a term 10, that's let's say $22 a month, at the end of those 10 years, it might jump up to $67 or $70 a month for the next 10 years. So if you know that you'll need it for, let's say, 20 years, instead of getting a term 10 and then renewing it for another 10, just pay the increased premium to get it for that full 20-year period, because in the long run, it might be more expensive initially, but over the full 20-year span, you'll spend much less than you would have, if you had went with a term 10 and then renewed it at 10 years. So if you know you need it for 20 years, get it for 20 years. If you know you need it for 30 years, get it for 30 years. So I hope that answered a lot of your questions about how to get your price for life insurance here in Canada. And by the way, I mentioned this at the beginning of the video. If you just want to look up instant quotes for term life insurance here in Canada and apply online, if that's something that you're interested in, I will put that link in the description below, and you can check out affinitylife.ca to instantly see quotes. But I hope this gives you a good idea of why life insurance prices are different. You can see that most of the companies here in Canada have generally the same rate. So by the way, if you're actually comparing, let's say, one of your products or one of your friend's products to a neighbor's product or something similar, and you're wondering why the prices are so different, there could be other factors in it. Like maybe there's a rider within that policy. Maybe you're comparing a term 10 to a term 20 and you're trying to figure out, well, they're both term products. Why aren't they the same? Well, because term 10 is obviously cheaper than term 20. So if you're trying to compare one life insurance policy to the other and you're trying to figure out why one is substantially cheaper or substantially more expensive than the other one, there could be more reasons than meets the eye, and make sure that you're actually comparing apples to apples. And if you guys have any questions, of course, you can book a call with me on my website or drop it in the comments below. But I think that's all I can say about life insurance prices in Canada. I hope you guys enjoyed this video. And if you guys are enjoying this content, all I ask is that you give it a thumbs up, and I'll see you guys in the next one.